I think it was an important move. The Fed put a little foam down on the runway yesterday. I think confidence was what it was all about. Jay Powell himself said that central banks don't have all the answers in this situation. If this were a movie, we'd be talking about central banks as essentially the supporting actors. The show can't go on without them, but really the lead actors, the ones who are going to drive the plot line forward, are the public health officials. They'll determine the contour of how the disease spreads and what its social impact is. Fiscal policymakers are second in line, and they really need to step up and show that they can put in place a timely and well-targeted action in a speedy fashion.
I just want to point out that the Dow futures are now indicated up by about 620 points.
And that's what I want to ask about. Dave, when you were inside the Fed, we know that you guys look at the markets, and some people kind of criticize the Fed for looking too much at the markets. Tell us how they're going to internalize yesterday's market action. And let's go back to Friday. At 2:30, the chairman comes out with a statement saying we're going to use all tools, really signaling the rate cut. Monday, and that, by the way, puts a little floor in right there because you ended up coming off the bottom. Big surge on Monday. Fed comes out with the rate cut. The market falls further quite a bit. And this morning, it's up. How are they going to view the move in the market and the effectiveness of their rate cut relative to that?
The Fed's really in it for a longer-term game. They're not too concerned about what happens on Friday afternoon or Monday morning or the futures opening today. Their job really is to promote a set of longer-term objectives and point the economy back to a stable place, while at the same time clearly communicating that they're on the job, that they're actively monitoring the situation. And what was important yesterday was just the simple fact that actions speak louder than words. And what they demonstrated yesterday with their action was that they're on the case.
Krishna Guha, the vice chairman at Evercore ISI, is also here. And Krishna, from the Wall Street perspective on this, didn't look great yesterday. Wall Street didn't seem to really be bolstered by what they saw. But do you think it pays off longer term?
I do, definitely. So 100% agree with what David said. This is not the primary. Response to the virus crisis. That's public health. That's fiscal, but monetary policy helps. So let's enumerate some of the ways it does help. First of all, it leans against a tightening of financial conditions. Secondly, it validates the move down in long-term rates. That's going to provoke a wave of mortgage refinancing, putting cash in the hands of consumers. It's also going to help the home building industry. And look at the dollar. It's really important right now that the Fed keeps the dollar moderate. That's going to provide essential relief for emerging markets where companies have borrowed in dollars and enable their own central banks to do more aggressive easing actions to boost growth around the world.
That's an interesting point. You say keep the dollar moderate, meaning they can't let the dollar get too strong, but basically make sure that they're aligned with what other central banks are doing so it doesn't move too far one direction or the other?
Well, I'm actually saying something even more than that, which is if you're an emerging market central bank governor today, you want to try and ease policy, but you're worried about the exchange rate. If the Fed is cutting rates, less pressure on your emerging market exchange rate, more opportunity for you, the emerging markets, to cut rates. So you're not just getting a boost at home. The Fed is also enabling others to act to support their economies, too.
Dave, is this the last word from the Fed here? There's been a lot of discussion about other administrative measures, supervisory, regulatory things the Federal Reserve could do. We had Bill Nelson on yesterday, I guess your former colleague at the Fed, who talked a bit about this idea of maybe lowering the discount window rate, maybe extending the term, other things the Fed could do to help, I guess, grease the wheels of the financial system.
I don't think this is the last word, Steve. There's a range of other actions that they can take, but I really don't want to lose sight. I want to come back and reemphasize the Fed's a supporting actor here. It does have a role. It has to continue to monitor carefully that the financial system is functioning well. I don't think we have any indication yet to the contrary on that front. But really, at this point, all eyes need to be on promoting to the maximum extent the public health efforts and secondarily getting a fiscal package that's implementable, timely, well-targeted, and tailored to the unique characteristics of this really unusual situation.
So, John, my question to both of you. Globally, yes, we've seen what central banks can do, but fiscally, what do you think governments could do that could provide what would be some confidence to the global markets? Because once you get that, then I think you could provide some type of floor to these markets.
Well, first of all, I think
I think there's really two. Dave, why don't you go ahead?
I think speed is of the essence, and there's something to be said here for pulling a play out of the playbook that has been executed before. There will be a tremendous temptation here to get kind of fancy and design something that's very narrowly targeted to this particular situation. That's great. I think we ought to move on two channels at once. We can multi-channel here. One is we ought to be thinking about providing support, for example, for workers who are going to be asked to stay at home because of the infection, for school kids who are not going to be getting their nutrition that they rely on in so many schools across the country. At the same time, I also think on a second channel we ought to be putting some broad-based cash in people's pocketbooks through some kind of a rebate check or a payroll tax cut.
Last word on that, Krishna?
Yeah, so look, I think that makes total sense. There's really two areas I would focus on with fiscal policy. One is targeted relief for companies and individuals who are hitting cash flow problems. That includes, I think, the need potentially for some credit guarantees and credit support from the administration. Maybe that comes through expansion of SBA, Small Business Administration, lending guarantees. And then the question is the aggregate demand stimulus. We think the Fed is going to go more. We think the Fed will cut another 25 in March, another 25 in April, and then face an existential moment of truth, perhaps around June, where they decide whether they've done enough or they have to kitchen sink it down to zero. But what is true is in this environment, the Fed needs all the help they can get. So it's time that fiscal stimulus also steps up here.